Welcome to this morning session on the Union Budget 2022. As most of us would have heard yesterday and felt similarly, the Union Budget comes at a time when India faces the third wave of the COVID pandemic and amidst a strong sense of economic recovery. The budget really emphasizes on the need for a digital agenda, and in its many proposals advances the objective to make the quality of life and the methods in which we interact and do what we do quite easier, and relies heavily on technology. This budget also lays down a very futuristic roadmap on the vision for India, the concept of the Amrit Kal, the 100 years of India as an independent country. So with this quick backdrop on how the budget has been, I would now, I would now invite my my colleague partner, Shashi Matthews, to quickly take us through in a couple of minutes what are the key policy announcements that have been made in this budget, what are the significant tax proposals that have been laid out in this budget. Shashi, over to you from here.
Thank you, Ritesh. It's great to have everyone here. And as Ritesh pointed out, that as we had a great budget yesterday, even though it was a short speech as compared to the last few years, what we are attempting here is just to give you a gist or a snapshot of what was announced yesterday. So just to take you quickly through the policies announced by the government and what the economic survey came out with. In fact, as part of the finance minister's speech yesterday, she had taken out a paper to show that GST collections were the highest in January over the last few years and probably the highest ever. So on that basis, the government, I think, has really pegged on tax revenues for increasing its expenditure. There is a focus on uplifting capital expenditure. As we can see, there is a lot of focus on domestic manufacturing, on infrastructure spending. There is a growth in the center's gross tax revenues, which is a good sign of the economy. In fact, what was also announced yesterday was that over the last year, the economy is showing a bounce back from what is being seen from the tax revenues. And we are also looking at the fiscal deficit is being estimated at 6.9% of GDP, as against the targeted deficit of 6.8%. With that, with a broad overview of that, what I'll do is I'll just quickly take you through some of the key tax initiatives and tax reforms which have been announced by the government in the union budget. We'll begin with direct tax. In direct tax, surprisingly, there was no change in tax rates for individual as far as the personal tax was concerned. Some relaxations and exemptions from tax were introduced for COVID-related benefits, which have been received by employees. One thing I would like to point out that while there was no changes in tax rates for individuals, the government has come out, or rather is proposing a new tax return, an updated tax return, also which will allow an assessee to file if there is additional tax which has to be paid in specified categories. The assessee will be allowed to refile or revise the return. The tax, there was a concessional tax rate of 15% on dividends, which was from specified foreign companies, which has been surprisingly withdrawn. The hot news which came out yesterday was on the scheme for taxation of virtual digital assets, and there is a lot of talk on that, which is out there. And in fact, I think that will also be a part of our discussion today. Broadly speaking, what the government has done is they have defined virtual digital assets. Transfers of virtual digital assets will be taxed now at 30%. And there are some other reporting conditions also which have come out in the finance bill. Now, furthermore, interest on non-deduction or non-collection of tax at source will now have to be paid based on an order of the tax department. Furthermore, perquisites which are being provided if the value is beyond 20,000 rupees, there is a definite TDS now that will be there at 10%. In fact, now what has also been done is under 194IA for real estate transactions. TDS has now been based on the higher of either the stamp duty value or the consideration. This was earlier only on the consideration, and now the stamp duty value has come in. This is also because in some places where the circle value is higher, there the consideration might be lower. So the government is also tapping into that, so that there is a plugging of revenue leakage. Furthermore, there's an amendment in section 68 where now there's an additional onus on companies to provide a satisfactory explanation for source of loans, borrowings, and liabilities. Earlier, this was only on specified categories such as share premium. So with that, we are broadly trying to cover what the direct tax change amendments have been proposed. We'll now go to the indirect tax side. On the indirect tax side, customs, in fact, what the focus of the government now is that where there is where there are industries or sectors where we have the capacity domestically to manufacture, the government is trying to avoid or rather discourage us from importing those items so that domestic manufacturing can be boosted. And that seems to be the pervading theme in overhauling the amendments, in changing the exemptions, withdrawing the exemptions, and also granting exemptions in many cases. On the legislative side, considering that the issue of proper officer under customs has been debated and argued in the courts multiple times, there are now retrospective amendments which have been proposed to deal with the issue relating to proper officer. And there are broad situations where proper officer is being assigned powers, and the definition of that is also being given. And these powers have been assigned not only on the basis of territory or class of persons or cases, but also on a randomized computerized basis. So that is something that will deal with all the judgments which have come out in the past. Furthermore, interestingly, under customs, the applicability of advance rulings have been restricted to a maximum period of 3 years. Earlier, it was on the basis of question of law, etc. That has now been fixed to 3 years. And if there is anything that is pending when the Finance Act is passed, the relevant date will be from the date of the passing of the Finance Act. Furthermore, interestingly, what has been done is import-export related data, which is being published, is now made punishable if there is value, classification, quantity, or name of the importer. This is a very surprising change which has come, and hopefully there will be a clarification on this, because a lot of cases such as special valuation grants or where contemporaneous imports have to be justified. Industries do use this data which is available on payment. So that would be something that we'll have to see how assessees and the government looks at this. And there has been an overhauling of the customs tariff itself, and that is simply to say it makes it for easier reading. Earlier, you would have to look at the tariff and then look at the notifications for coming to the effective rate of duty. This is now everything is being subsumed within the tariff itself. What the government has done is the changes in the tariff will come with effect from 1st May 2022. Until then, the customs system will have to be changed. Until then, the EDI system will have to be updated. So for that intervening period, the notifications will apply. There is a big news coming out that the SCZ Act will be replaced, and that's been proposed. We'll see how it comes up. But in the finance minister's speech, what was indicated is that there will be a greater participation and a greater role of the states to participate in development of enterprises and hubs. Finally, the Customs National Portal, which was announced last year, will now also include customs administration of SCZs, and it will be completely IT driven. So broadly speaking, this was the customs related legislative changes. And we'll now move to the GST changes. While there are not many changes in terms of rate, etc., crucially, what the government has done is the time for availment of input tax credit has been extended to 30th November. This was earlier September, so there's an additional 2 months that has been given. Availment of ITC has now been made more dependent on reporting by your supplier, and that is something that I'm sure industry is looking very keenly, and we'll see how this will come out in the final Finance Act. The matching process has been done away with. Broadly, there are these procedural changes which have come around in the GST law, and we'll see over time how this will have an impact. Interest rate has now been reduced to 18% from 24%. So, with this, a very quick brief of the budget, I'm handing over to Ritesh for for introducing the panelists. Thank you.
Thank you, Shashi. Thank you for a crisp but a very impactful summary of what's happened this budget. You're right. We saw 123 headline amendments to the tax laws of the country, 9 schedules to the finance bill, totally running into 400 plus pages of documents that got released. Some very significant changes, like you rightly mentioned, introducing a concept for taxing virtual digital assets such as cryptocurrencies and NFTs, some path-breaking policy announcements on the digital side, some commitment to the infrastructure spend. So quite a lot actually to process despite a short speech by our finance minister. But less from me and more from the panelists now. I have the privilege of today hosting along with me some very eminent speakers and some very eminent businessmen of this country. Let me begin by first inviting Mr. Sunil Mehta. Mr. Sunil Mehta has over 38 years of proven leadership experience in banking, financial services, insurance, and investments with leading global and domestic financial institutions such as Citibank, AIG, SBI, PNB, Yes Bank, etc. Mr. Mehta has now been appointed as the non-executive chairman of Yes Bank Limited by the Government of India in March 2020. And he has undertaken a wide array of board and global advisory roles with highly reputed entities in India and overseas. Good morning, Mr. Mehta, and welcome to this panel.
Thank you. Pleasure to be with you.
We have with us Mr. Amit Desai. Mr. Amit Desai has over 35 years of rich and diverse industry experience in sectors such as ports, thermal energy, transmission, renewables, and pharma. More recently, Mr. Amit Desai is a founder of Anubhuti Value Trust, a SEBI-registered AIF. He has also served the Adani Group for 15 years as a group CFO of the Adani Group and has led 2 IPOs and several other listings and M&A activities in the Adani Group. Good morning, Mr. Desai, and welcome to this panel.
Good morning. Pleasure to be with all of you. Thank you.
We have with us also today Mr. Subhash Chandra Garg. Mr. Garg has served various pivotal positions for both the Union government and the government of Rajasthan since the last 4 decades. He's a 1983 batch IAS officer of the Rajasthan Cadet. He is also a topper of both the Institute of Cost and Management Accountants and Company Secretaries. Mr. Garg has been the Economic Affairs Secretary of India between 2017 and 19, and he also served as the Executive Director of India in the World Bank Group between 2014 and 17. Good morning, Mr. Garg, and welcome to this panel.
Thank you, Ritesh. Happy to join. Thanks.
Last but not the least, we have Nikhil Kamath joining us today. Nikhil, as is known, is popularly known as the icon of the youth, both in terms of the startup industry and also in the financial services world. Nikhil, at the age of 23, co-founded Zerodha with his brother Nitin. The company aimed to revolutionize the Indian financial market access by adopting a transparent, ultra-low fee model with a proprietary tech-driven strategy. In September 2019, Nikhil co-founded TrueBeacon, a client-assigned asset management initiative. TrueBeacon brings fund management experience to a global group of ultra-high net worth strategic investors with a disruptive zero standing fee model. Nikhil is also the youngest member in the Forbes 100 Richest 2020 list, and in 2021, he was named the youngest philanthropist on the Edelgive Hurren India philanthropy list. Welcome, Nikhil. Good morning. Thank you all for joining us. It's an absolute privilege to host such members on a panel. So to begin with, let me start by asking each one of you what your first reactions to the union budget were. In your view, what were the hits and the misses that this budget delivered? And who else other than Mr. Garg to begin with on this subject?
Thank you, Ritesh. The budget has been made in quite a difficult situation in which we are, and we are coming out. So we had 2 years of pandemic affected economic growth and distribution. The government had to take a lot of measures to provide the support to the poor in terms of free ration and many other things which were done. Fortunately, in 21-22, the tax growth started doing well. So this year we had about 3 lakh crore over the budgeted 18 lakh crores of additional revenue receipts, so which provided some comfort for the 21-22 budget. The government expects next year to have that kind of not that kind of buoyancy, but still better. But government's performance and expectations from the disinvestment have been much more muted. So you saw the disinvestment targets being revised from 1.75 lakh crores to about 78,000 crores this year. Taking all these things together, next year's the same kind of realism appears to be there in terms of projecting the tax receipts and the disinvestment receipts. So next year it's only about 2 lakh crores additional revenue. So that would probably have some sort of pressure on the revenues next year. This leads to a situation where the government's expenditures are expanding, but the revenues are not that sort of buoyant for the next year. Government's revenue expenditure is expanded, on which it has no real control. Having the debt of the country having become very large, next year's debt is expected to go 152 lakh crores, which is about 60% of the projected GDP. And this will lead to about 1.5 lakh crore of additional interest payments next year, right? Despite the pressure on the revenue account, the government chose to expand the capital expenditure on the government account by about 34%. So that was the key strategy in the budget, an expenditure-led or Capex-led kind of growth for the next year. Now, if one need to go into the realism of what the government expects in terms of the delivery of this or execution of the business budget next year, I think one would need to do a little bit of realistic check. Let me begin by the reality check on the Capex itself. So on the Capex, what the government has done is that it has increased by about 2 lakh crore the Capex for the next year. But that 2 lakh crore actually comes with some of the, so about 1 lakh crore government is giving to the state governments for as loan to expand. So it will be state government's expenditure. And 1 lakh crore of the Capex, which is being done through the central government and the agencies, is actually compensated by reduction in the Capex of the public sector entities. To give you an example, the NHAI, which borrows about 60,000 crores on its own account, now, for the next year, the NHAI will receive about 60,000 crores more from the government, but NHAI will not borrow or raise resources from the market. So effectively, government's total Capex, including the public sector Capex, has actually not gone up. So that is the challenge of the fiscal management in situations of growth of revenues not taking place. I'm quite worried about the debt built up, which is taking place. So huge debt built up is what is financing the government's revenue and capital expenditure. these would create problems going forward. So today, running fiscal deficit of 6.5% or 6.7% has in a way become a new normal kind of thing. These are very high level of fiscal deficits which the government is incurring, is running. And in the situation where the global liquidity seems to be now coming under a little bit of stress, and the domestic liquidity being sort of taken too much by the government, has led to the debt, the bond yields yesterday going up by about 20-25, and it's threatening to cross 7% very soon. So there would be a very serious impact on the bond markets, which may in turn affect the equity markets going on. So I would need to see how things really pan out in terms of the investment or in stock market returns also. Last thing which I'll say is the one big elephant in the room is how the LIC IPO is likely to behave. The fact that government has reduced the budget provisions quite a lot, either it's assuming that the LIC would be done in 5% kind of thing for 2 years, which looks a very dicey strategy, or it's still struggling with the valuation of the LIC, because there is a real issue out there. LIC earns about 3,000 crores of profit a year. And if you have the market capitalization, anything beyond 3 lakh crores, which in itself is also 100 times, there's some talk of doing it 15 lakh crores, of 500 times of your profit. Now you can shift some profits from the policyholders to shareholders, but that would create another problem. So I think that is the space one would like to watch. In my initial remarks, I would like to stop here. Thank you very much.
Thank you, Mr. Garg. On that note of the market, let me bring in Nikhil Kamath on this. And let me check with you, Nikhil. Would you carry forward a similar sentiment? What's your thought on this budget?
Yeah, I would largely agree with Mr. Garg. I think from an investor or a trader standpoint, there were a few things we were looking at, like we have been for many years now. STT is really high in India, security transaction tax, which is charged at about 1,800 rupees a crore on the sell side. People don't often realize this, but in equity markets in India, about 90% of the turnover that happens is on derivatives and not on equity investment. When you're trading derivatives, a trader or an investor with 1 lakh rupees in his account is typically trading a contract worth 10 lakh rupees multiple times in a day with leverage. When that happens, STT is charged on the turnover, it becomes incrementally a really large value. To the extent that a retail trader in India today spends more in STT than he pays to, brokerage, more than he loses in the market, more than transaction charges, stamp duties, and all other kind of ancillary charges. So STT did not exist up until, Chidambaram removed long-term capital gain tax and, kind of implemented this. Now we have both LTCG and we have STT. I don't think it is conducive for a market and an ecosystem which is trying to attract foreign capital. We want more speculators, we want more traders in the ecosystem. If not for them, the impact costs go up by so much that we become less attractive globally. So that did not happen. Hopefully people look at it in the upcoming budgets. The second big thing we wanted is taxation on derivatives to be rationalized. Derivatives as a tool for hedging to make more robust portfolios have become increasingly important with time. They are the only means through which one can actively hedge their own portfolio. If you want to reduce risk on your portfolio and you need to hedge, you need to use derivatives. And if they at the maximum rate are taxed at 43%, it's a big disincentive, and I don't think it's helping anybody. We have a AIF which operates in the category 3 space. So it's a hedge fund kind of focused on equity markets, publicly listed large cap equity only. There's no pass-through taxation there. We are taxed as a trust, unlike a Cat 1 or Cat 2 AIF.
Right.
This is pretty much killing the Cat 3 AIF industry. Why would an investor not go to a mutual fund and pay maybe half the tax, but instead go to a Cat 3 AIF and pay considerably higher tax rate? It's a really robust product. Cat 3 AIF is bringing in a lot of money into the ecosystem. And we were hoping something happens there, but it did not. From a more broader lens, if I were to talk about me as an entrepreneur or as a businessman, in my holding companies today, if we make 100 rupees of profit, we pay 25 rupees of tax on top, which is the corporate tax rate. So we are left with 75. And if I have to, withdraw some money to, say, for example, buy a home, I pay dividend distribution tax on top of that of 43%. So if I were to, make an income of 100 rupees, my net effective tax rate, if I were to withdraw it, becomes 53%. That is not including, stamp duty and GST and all the other ancillary taxes someone like me would have to pay. I think at 53% plus, you're really disincentivizing an entrepreneur to, operate as a public limited company. Dividend distribution tax, something has to really be done there. Outside of these things, which are specific to me, the things I found interesting in the budget, a lot of jargon is always said with the budget, right? Like 90% of it is largely irrelevant to 99% of the people. The things I found interesting was the stuff around virtual assets. I will probably have to ask Ritesh itself to interpret it for me in a more simpler manner, but it looks like there is a tax arbitrage now. If somebody is investing in equity and holding for 12 months, he pays 10% as LTCG. But if someone is trading Bitcoins or buying Bitcoin and making a profit at the end of 1 year, he pays 30%. Will it give rise to companies which are created just with the sole purpose of holding crypto? Once the crypto bill is passed and is legalized, will be interesting to watch. From the definition of what the government put out as virtual asset, it looks really broad. It looks as broad as, if I send Ritesh a picture and say the cost of the picture is 500 rupees, Ritesh will probably have to pay that tax because that can be categorized as a virtual asset. So I found the virtual asset bit interesting. I think the crypto industry pretty much looks at any statement by the government where the word crypto is used as a positive because they think that is legitimizing it in some way. I would assume that a 30% tax on crypto transfer is probably negative for the industry. The other thing I found interesting is, the government intends to spend 39-40 lakh crores next year, but the revenues are about 24-25 lakh crores. So there is that gap in between of 15 lakh crores. The divestment number is low. I think they've factored in for crude to be at $70-$75 versus the 90 plus it is trading at today, and it seems like its price is on the way up. It'll be interesting to see where that gap of 15 lakh crores is filled by. There are many issues in our economy today. A lot of it we do not really talk about. I think inflation, even if the government is reporting 5-6%, pragmatically for people living on the ground, feels like it's a lot higher. We've seen crude rally 100%. We've seen copper and steel and iron ore and everything has rallied upwards of 100%, which is a raw ingredient to many industries in our ecosystem. So if one were to factor in inflation pragmatically as nearer to 10%, I would say that is like an additional tax. If your tax rate is 43% and your purchasing power is going down by 10% every year, you're net effectively paying 53% tax as an individual in India. So many things on which clarity is needed. Net, the ecosystem is robust today. There is plenty of liquidity which has come in many ways percolated down from the West, which has been printing money like no man's business. But it'll be interesting to watch in the future what happens and how we curtail these issues, which can become much bigger than we think they are today.
Thanks, Nikhil. I tend to agree, especially on the crypto. It's a bit of a vague regulation. But yeah, barring the trade leverage between a listed equity to a crypto, if you actually looked at a capital gain position for unlisted securities versus the crypto, 30%, just on the back of the envelope working, does not appear as punitive. Perhaps, or to the spirit, I agree, but mathematically, I think we are left with a 7 to 8% kind of an incremental tax net to net. But that's a conversation, I suppose, for later. And on that note, Mr. Desai, speaking of the markets and the general economic sentiment, your views, please.
So I think it was quite interesting to listen to the presentation and what Gst said and what Nikhil has been saying. On a lighter note, for one thing, the budget does for sure is it produces many economists and experts on the day and for next 2 days of the budget. Gst, I don't mean to include you in that category for sure, but guys like me have a shelf life of 24, 48 hours to provide my expertise. What I'm going to do is talk about the practitioner's view rather than go in other direction. Yes, huge capex push by the government, 35% up on the budgetary estimate FY22 versus FY23, which is a huge push for the government to really come into the mainstream of many things that government has been already doing. That with no changes in tax rates, except for 2 minor changes of cooperative alternate minimum tax and a revision down of the surcharge on the LTCG, I think there is going to be definitely a challenge as we see revenue spend also going up to nearly 40 lakh crores. The budget size is now closing to 40 lakh crores, which is another 13% jump from the previous year. So this being fact on one side, as a practitioner, if I were to see the leeway or accommodation that is available with the central government is hardly much, because they have nearly 25% of the revenues going on debt servicing, 5% on pensions, and about 10% to grants to states. So that doesn't leave much elbow room with the government to really do much through this whole space of the budget management, which actually brings out what Nikhil said, what Gst said earlier, is even with 13% higher gross tax revenue, we are going to face a huge gap. And now the earlier headline number was 4% of fiscal deficit as percentage of GDP has comfortably gone up to 6%. And we really are not really getting worried. Even if one were to grant the issues of legacy to the current government, I think what we are now constrained to do will continue to add to the budget pressure of servicing the debt in the coming years, undoubtedly. So I think legacy of fiscal deficits, which are continuing and adding up, is a big factor of worry for me as a practitioner. Not that I have ever to play this big role that Honorable Finance Minister is playing, but that is a worry which will lead to, on the practitioner side, a large government borrowing program. We are looking at a huge government borrowing already taking place this year, and another 14-15 lakhs crores of gross market borrowing next year. And as all of us have seen, the yields have already started spiking up. So what other developed economies may have been able to afford for many years through their, if I may use the word, loose monetary policy, we may have very limited window to do that. And I personally think that there is going to be a sharp rise in the interest rates starting second or third quarter of this calendar, which would start impacting the private sector Capex, which is yet to even come in. And that's why government is already building itself up for the Capex. So that is one big concern that we must see. It's a very, very encouraging state of numbers that one reads. 25,000 kilometers of additional highways, 2,000 kilometers of railways with Kavach, 60,000 crores being given for household Har Ghar Nal Se Jal. More importantly, 19,500 crores for manufacture of high quality modules for the renewable manufacture in India. These are some of the big push. And I think that will really put us on a forefront of renewable, which we are already achieving our target ahead of what we have committed to the world. I think what the government could have done, though we will come to that towards the end, is could have really given some relief. I'm mindful that this is not a preceding year to the electioneering, but some relief would have been given to the middle class. While the government has rightly extended the credit guarantee scheme for MSMEs, they could have done more in terms of giving them some special tax rate, because it's the economic policy which will induce a certain behavior. And I think that lot is in a huge stress. So government could have possibly done something. I think bold reforms in terms of revamped SEZ Act, 75 digital hubs, 1.5 lakh post office coming under the ambit of core banking, accelerated voluntary winding up. These are very, very welcome steps. But I think as the year pans out, in my understanding as a practitioner, with higher interest rates staring at us, government being the largest borrower, this is going to be not so easy a year for the private sector as much as they would have thought, given the context of the fiscal and monetary context that we are placed in. Thank you.
Thank you, Mr. Desai. It's quite interesting. You bring up that there is a large amount of borrowing, and how will the government fund its expenses. Some of us were expecting that there will be tampering made to the ATC limits, so that at least some bit of domestic savings come into the ecosystem and will fund some of these expenditures from the government. But that said, Mr. Mehta, your views on all of this?
Thank you, Ritesh. So coming in last as a panel speaker sort of gives you an advantage and a disadvantage. Much has already been said, and there is also, I can sort of take now a contrarian view to what has already been articulated. I sort of look at it that, we are coming with a backdrop of 2 years of a very, very complex situation. There was a slowdown in our growth even prior to that. And then to top it all, in the financial markets, we had the huge legacy problem of the stress assets that had accumulated in the banking system. So credit outlay was perhaps more curtailed as the entire financial markets were sort of doing some degree of consolidation. Corporates were under a severe watch. They had to go through a deleveraging, whole deleveraging sort of program to offset what had been done over the prior decade or so of very loose credit growth and very poor underwriting that had sort of set into the entire banking system, and a state of euphoria that was there about unbridled growth that India was probably going to move up to. And there were sort of factors that sort of led to this kind of a situation. So I think fundamentally for any responsible government, there was required a course correction from a governance point of view, from compliance, ethical standards, for even for from corporate taxation or individual taxation. We had a huge cash economy that had been building. The government attempted to sort of come in and intervene on that. There were two schools of thought over what the impact of that was, and I think everybody is entitled to their views, whether that was what the objective of that decision was. But I think there were serious flaws in the way our architecture itself was built. To top it all, we had our institutional infrastructure has been weakened over the years. We've got a real problem that we have not been able to fix as to how our regulatory institutions needed to be made more robust so that that could keep pace with some of the issues that we are facing today. You know, we're speaking about this whole aspect of the digital currency, the cryptos, the whole aspect of other complex situations in the market, and whether we were able to, or we have been able to react at the right time. The intent of the government over the years, and I'm not taking this budget as one particular act, the intent of the government over the years has been a right direction that they wanted to follow, of creating a much more robust economy based on digital-based economy, where integration of the bottom of the, or the economically disadvantaged to the rest of the economy had to be done. So the entire Jandhan and the JAM initiative that they had initiated, now this is going to have a very long-term impact. This is not going to find immediate positives on this. So I think all of those, you will see that those aspects are going to have the optical fiber integration, the post offices, whatever initiative that sort of they're undertaking. There's no magic wand to do this overnight. And we've got to sort of look at it that each budget is a baby step in that direction. So as long as they're moving and there's a continuity of that direction, I think that is, from my point of view, the most important piece. The second piece that is absolutely critical is for us to evaluate and to see whether the statements of intent are being executed properly. And what does it take for good execution? Because at the end of the day, if you look at it, the point that was raised by my preceding panelists was, let's say, on the issue of disinvestment or the privatization. Now, no government in the past has had the courage to use the word privatization or disinvestment in the nature in which they are coming up with. Now, everybody recognizes that it is not an easy process. Even getting the right value on an LIC or some of the other, the banks, some of the banks that they were wanting to privatize, or IDBI, which has been potentially one of those that have been on the block, or in the case of the state-owned general insurance companies that had been identified. It's a process. It takes to get the right value on, these are taxpayers' assets. You've got to get them ready for that to realize the right value. You can't suddenly have them change course overnight. We have a revolving door of the leadership, and this is over the years of these corporations. How do you expect them to be market ready when there's no sense of accountability or ownership at the leadership level to be able to give them market ready? So you have Mr. Kumar, who's the chairman of LIC, gets an extension year on year, or his leadership has now. I think we've got to change that. So the entire element of flawless execution means, do we have the talent resources that are available with the government to be able to deliver on these, the execution of the budget? So fundamentally, I believe that we've got to start participate in not just looking at it, whether an ATC has been tinkered with or whether I'm getting a little bit extra benefit and whether I'm being hit by a certain tax. I think we all have to be accommodative as long as that intent and execution is being done appropriately without any appropriating the taxpayers' resources. And if that is done, I would say that this course correction will be probably the right way to take this forward. I'm very encouraged actually with this budget, even though the finance minister kept it to 90 minutes. I think that was great. Read it through a tablet, absolutely great. And from here on, all of us need to participate, engage, and contribute. It cannot be that at the back end, some of these solutions come from external consultants on some of these complex issues. And if we do not have the change in the way, now Mr. Garg would know that the Secretary DFS who was there till January 31, he's finished his term. We'll have somebody else who comes in. All of these continuity of the bureaucrats also at that senior level has to be there. Because the implementation of this is quite challenging. So we've got to be advocates of some of those fundamental changes in which the government organizes itself to maximize the revenues from the market, make sure the expenditure goes and has an impact like any corporate would want to do. What is the return on the investment that we are getting, and the time value of money. That is absolutely critical. What we can get today from whatever the expenditure that we are incurring, we will not be getting it 2 years down the line. So I think these are some of my opening comments, but I am actually encouraged with the direction, but execution of all of this would be critical. And one last point, if I may, on the interest rates and what was, I genuinely believe that you will see in the short term some marginal increase in the yields and the 10-year yields and the interest rates. But I would say that they would start sort of petering off over a period of time, and that may not be such a big impediment for our growth over a period of time. And credit and private sector's participation, you will see that from 2023, as capacities sort of become more fully utilized, they will participate and they will sort of start coming in with Capex as well to supplement the Capex, which is the government and the public sector Capex.
That's quite useful, Mr. Mehta, and good to see some bit of optimism on the budget proposals that have been that have been put forward. I tend to agree. At the end of it, it all boils down to execution. Unfortunately, we don't have a mechanism in which we get a formal update on some proposals that have been tabled last year, what's happened, except for a very big thank you. This year, we actually didn't hear much on what they did and how far progress was made. But I hope someday we do get to that kind of a mechanism where we are also able to understand what has happened. And on this note, speaking of it, again, from a banking world point of view, there was a very specific mention on acceptance to digital banking, acceptance to digital payments, setting up of 75 centers for digital banking, etc. Mr. Mehta, what's your view on some of this? And in particularly, how do you see the digital drive that the government is now pushing for?
I think fundamentally, Ritesh, as I mentioned earlier, that this has been not just what was mentioned yesterday in the finance minister's budget speech, but this has been the general direction of the government on the entire digitization of the economy. We will have some infrastructure challenges as we sort of move in that direction. The whole aspect of the post office's integration has been there on the table for quite some time. I think it's a great move. It was a wasted resource over many, many years. Our Indian postal services played such a fabulous role over the years in banking the entire unbanked, if you wanted to send a money order. Now you have internet connectivity, optical fiber, and I think the faster that we can sort of move in that direction, the better it is. And the entire banking system, and we have, the young entrepreneurs like Nikhil, and the entire ecosystem is changing so fast. I mean, did anybody realize that some of the valuations that we are going to get for these digital players are what the market? It is all about. That is the way this market is going to move. And I think the faster we can get this and move it, and there will be some challenges, but if we correct them in time, and we will be out there. The whole aspect of data, as to how we are dealing with data and how the entire digital economy is going to get that. The GDPR, the entire privacy on data itself, it requires more regulatory clarity on that. So as I said, the regulatory architecture is so critical, because if they don't understand the sophistication of what is with the direction in which the markets are moving, I'm afraid there will be still a lot of issues that will still make this market a challenging market to participate in.
Sure. And on that note, Nikhil, if I may bring you on, as your role in Zerodha have been a digital revolutionary. You've transformed the way we've done stock trading in India before. What's your take on some of these digital measures, the need for infrastructure? What's your take on this?
I agree with Mr. Mehta. I think there is no contesting the fact that, we have had 46 unicorns or whatever in the last 1 year, and the ecosystem is robust today in India. The one big difference I can see from maybe 5-10 years ago is liquidity is available. There is cash available. If you're a new company starting off, or if you're a new startup starting in India today, if you're doing an half okay job and you have a product which looks scalable in an industry that is growing, you will find funding, and you will be able to grow your product. So full credit to the government and the Honorable Prime Minister to have created that ecosystem. That being said, I think especially in the last 2 or 3 months, a lot of money is going out of India, especially the foreign institutions. Right, they're selling every day. You take FPIs, you take FIIs. I think it is but a matter of time before not just public markets, but private markets, the funding will dry up as well. And, we can't base ourselves on the wins of the last 12 months. And when the ecosystem becomes tighter and it becomes harder to kind of like raise capital in India, all these smaller issues that we're talking about today, I think they will play a bigger part. Like I was making my first point earlier with taxation and stuff like that, I think on a relative basis, if we become more competitive today, it will only help the entrepreneur ecosystem in India do better in the long run.
Right, and that's the sense also that UAE adopted, right? They adopted a flat rate of 9% when it comes to corporate income tax. And therefore, you're right in saying that India must be open to some of these disruptive changes. And I more than anybody else, I would agree with you on this particular thing. But on that note, Mr. Garg, speaking of taxes, tax collections, income and expenditure, there has been increased focus on how some of these uptick in tax collections, and like Shashi pointed out, a special mention of increased GST collections by our finance minister. What's your sense on this? Do you think the tax buoyancy will continue? Do you think this kind of is this a one-time base effect phenomenon? What's your view on both sides of this, the income and the expense?
On the income side, just one fact to remember, the corporate tax in the revised estimates for the current year are placed at about 6.5 or 6.6 lakh crores. This is lower than the corporate tax collection in 1890, 3 years back, when it was 6.67 lakh crores. So sometimes in the short-term buoyancy, which you see on a very large loss or destruction in the last 2 years of the income, we start feeling that we are doing absolutely fantastically. We're doing well, but we must remember that where are we coming from and the kind of destruction of value which had taken place in some times. The personal income taxes have been doing reasonably well. They have grown steadily, which is what is reflected in the higher incomes in the formal sector, and that is getting sort of taxed when the results are there. The GST, to my mind, I don't know, somehow we have acquired this benchmark sense that 1 lakh crore a month is a good outcome. And more we move from 1 lakh crore, we are doing much better. But please remember that with the kind of the good performance relative to the previous years we have done this year, still there is a shortfall of about 2.5 lakh crore plus on the GST compensation for these states. So what was projected in 16-17 to be the path for the GST revenues has not gone anywhere or close to that so far. Also, please take note that on the wholesale side, there's been much larger inflation than on the retail side, and which is also reflected in the GDP growth. So GDP growth this year of about 17% in nominal terms, right, is a lot of inflation built into it. So, and the goods and services are priced in the current prices, and therefore they're resulting in the higher GST collection is not very abnormal. So if the GDP grows at 17% nominal and your CGST grows at 16 or 17%, the tax buoyancy is not really, so I would caution a sense of realism. And as I think Nikhil said a little while earlier, I think Amit said, the inflation is also a major tax. Right. So on your value get destroyed to that extent. So I would see, and now if in the year to come, if you don't have control over inflation and the growth of taxes is not equal to the nominal, it might still be impressive at 15%, but if your nominal growth is 17 or 18%, then you might still feel the situation. So I think we should be sober in our assessment. We have done well this year. We should continue to think about ways how to deal in future. So on tax side, I think there are a number of issues relating to rationalization of tax rates. We have created a regime where there is too much of rates and too much confusion thanks to cesses and surcharges and other kinds of things. We should have addressed to that. The corporate tax rates have been brought to a reasonable level, but still there are lots of issues connected with unlisted companies and others, which is there. And the double taxation of the corporate incomes, and then again in the hands of the people as dividends. So I think some rationality is needed. So those issues needed to be addressed. On the expenditure side, I'm not going back to the disinvestment, which I dealt with earlier. One of the important items on the revenue side is also the what we call non-tax income. There is a lot of volatility there thanks to what the RBI distributes as the surplus to the government. So in last 3 years, if you see, it's from 1,60,000 crores down to about 60,000 crores, again up to 1 lakh crores. And now the government's need to dividend has made RBI sort of doing some sort of management of surplus by selling the securities and buying the securities virtually simultaneously. So that would have a lot of, I think, implications for the next year as well. On the expenditure side, I'll just reiterate, I won't take much time. The Capex at 7.5 lakh crore, out of about 40 lakh crores of this, is impressive at 2.9% or something. But if you include the Capex of the public sector, which has been reduced, the growth is not that much. And we have a lot of pressures on the revenue side. The government has probably underfunded the food subsidy for the next year, keeping it at only about 2 lakh crores, which is very low, because whether you distribute food free or you keep it with the FCI, there is a lot of burden which comes to the government. There is also likely to be a lot of pressure on the fertilizer subsidy on account of the rising gas prices and the oil prices, which feeds into the fertilizer subsidy. The domestic gas suppliers, natural gas suppliers, their prices have also been increased and are going to be further increased, which will further feed into. So on the expenditure sides, besides the burden of interest, even on subsidy side, I see enormous amount of pressure. That is reducing the government's capacity to deliver direct benefit to the poor, to the guys who have lost their jobs and who are losing their wages. So we didn't see much of the package on that front. So I think situation is good, but difficult. And there are certain trickier developments which need to be taken into account when we go for the next. Thank you.
Thank you, Mr. Garg. Mr. Desai, before I come to you, I just want to once quickly bring in Nikhil. I'm mindful of his commitments. He had to sort of attend to something else. But Mr. Desai, on the note that Mr. Garg left us with in terms of tax buoyancy and the general pressure on the expenditure of the government. What's your thought on the tax collections, and how do you expect this trend to be?
So I think there is no disputing the numbers that Mr. Garg brought on. If I read from my summary sheet, the corporation taxes in FY19 were 6,64,000 crores or thereabout. Then they have seen a continuous fall for 2 years. FY22 saw a marginal increase to 5,47,000 crores, which became revised estimate of 635, which is a much higher collection than what was budgeted. And personal taxes have really grown one way between 19 to 22, from nearly 4,60,000 crores to 6,15,000 crores. This is a very robust increase. We should not forget that a large part of personal taxes burden is borne by the salaried class, and they completely have to comply. In a lighter vein, I always keep saying, when I used to be working for a corporation, that for every 100 rupees that we earn, we would barely get to see 63 rupees in our bank account. So, and now it is, I think, 58 rupees. So that's the kind of regimentation in the personal taxation side, which makes it very efficient in terms of collection. Having said that, a further change over RE by nearly 13.5% in tax collection is a bit of a tax tall order. Doable, but stretched. That's number one. Point number two, on GST, when GST was launched, there were independent working groups. I'm not going into the semantics of politics here, but they had given a break-even number of monthly collection of anywhere ranging from 1,10,000 crores to 1,25,000 crores a month. And as Garg Sahab pointed out, that number is now being achieved. So we have had a deficit of the past, and that's an issue that we need to address. So while there has been tax buoyancy, undoubtedly, government has done extraordinarily well in terms of hardening the tax discipline. It is not yet there as what one would like to see in terms of the tax collection in consonance with the growth of the economy, if that answers your question.
Sure. And Mr. Desai, speaking of some of these personal and you've been dealing with high net worth individuals in your role at Anubhuti. What's your pulse on how they've reacted to it? Would you have expected some bit of incentivization for private investments? What's your pulse on this?
So I think the high net worth or high earning bracket professionals, they are mindful that they must contribute. If I'm speaking for them or for myself, they must contribute by way of higher taxes. But I think when the corporate taxation rate has been so significantly rationalized, holding on to such higher individual taxation rates is a counterproductive, particularly when the individuals are also faced with double taxation for the dividend incomes that they make. So the only respite is the long-term capital gains that they can enjoy. But I think there is a lot of scope, therefore, that individuals who contribute to the taxes in the economy can be given.
And therefore, even for a Cat 3 AIF, if there was a pass-through status accorded, there would still be a significant amount of tax leverage that gets created in the hands of an individual investor because the AIF itself.
Absolutely. And I think as Nikhil rightly said, when you have passed through for Cat 1 and Cat 2, it does not make sense to not have passed through for Cat 3. Now, if there is any dichotomy with respect to how to tax the gains which are long-term or short-term versus if there is a derivative kind of an income, which of course needs rationalization, but that is possible to address within the ambit of AIF3 also. And as an AIF3 sponsor and manager, one does see a bit of inconsistency when it comes to the tax regulation of AIF3 vis-a-vis AIF1 and AIF2, Cat 1 and Cat 2. So that's an anomaly that one would very earnestly request the people in power to correct immediately, which can bring in more funds into the mainstream.
Right. So then, I mean, some of us did expect that there'll be some bit of rationalization. But again, I don't think that found place either. Mr. Mehta, coming on this topic on quality of life, the finance minister in her speech yesterday did bring about some elements of what they do to better the quality of life. And even on this discussion, I think it was pointed out that increasingly wealth has been transitioning out of this country to overseas jurisdictions. Any reactions to this? How do you see quality of life index for India, and generally, do you believe the reforms address it sufficiently?
Ritesh, you've hit a very important point, and I think it sort of leads me to sort of advertise the book, which has been stated, or this $10 trillion dream, which Mr. Garg has written and will be publishing soon, I understand. It sort of leads me directly into that topic, that whether we sort of head towards a $5 trillion or a $10 trillion dream or a $15 trillion vision, and even more when we're looking at the next 25 years, and that is what was mentioned in the budget speech of the finance minister. I think the aspect of sustainability, quality of life, becomes absolutely paramount. We have to start thinking well beyond and investing for the future, for the generations to come. There has been a very fast deterioration of the quality of life of our ecosystem, and we have to recognize that. And if we do not accept that we have to invest into that for the future, I think we will be making a significant mistake. There is no amount of wealth can sort of compensate for poor air quality index that we all sort of are suffering from. The entire sanitation that we look at the filth around the place. I mean, you have in Bangalore, which is one of the most richest cities in the country, look at the quality of your water pools there. I mean, it's shameful. And we as citizens need to now work on that. And I keep repeating this fact. We cannot throw stones at somebody else because there's no one to catch them on the other side. No one. This is our time now to engage and participate in this change. So Amit spoke about the high net worth. I think you will have the statistics. How many of our high net worth individuals have become, or promoters have sort of taken a non-resident status?
It's true.
I remember talking to some professionals just before the pandemic, and they said in February of 2020 that if it gets worse, I'm out of here. What a shameful statement. As an Indian, you know, where do you go? Where do you run? I mean, after all, the numbers are more in the United States and now in UK. I mean, hello, wake up and see what the issue is, fix the problems in our own backyard. So start investing in education, healthcare. Of course, we can say that there was not adequate in this budget on perhaps on education and healthcare. We should have seen more. It's a question of resources that we have. I think somewhere there's things about aspect like green financing, the finance minister spoke about for public sector. As a banker, I'm saying that in terms of ESG, in every credit evaluation, if I start putting in from my underwriting perspective, on ESG, how does each corporate or each promoter, how do they rank? Our credit rating agencies should start putting a higher weightage on the ESG piece, and that credit flows or capital will move only in those entities where they are ESG compliant or are contributing to our environment. So I think there are many different, I'm sorry, you must be running short on time, but you've hit a topic which is so dear to me that, and everybody, I believe, that this aspect of sustainability, improving a better quality of life, that is when it's a $10 trillion dream we have arrived at. Otherwise, I'm sorry, these numbers don't mean anything to anybody because we'll still be very dissatisfied. Mr. Garg will still say that we should have contributed more, we have a problem here. Amit would have also sort of raised the same issues. Nikhil would have said my STT is still very high. There will be something to crib about. But when the quality of life improves, I think that is the kind of satisfaction that we should be working towards now. We don't have the time as much as, but it will be too late for the next generation to fix that and to sort of do the course correction on that front. We don't have to rely on foreign capital, by the way. We've got to look at domestic capital. I don't want green bonds from coming. We've got to look at how do we expand our capital? How do we get more tax collection from the ones who don't pay taxes? How are we increasing our tax net? So it comes down to, again, I come back to execution, and it is participation by all of us together in this journey.
Interesting. I think generally, I think this budget didn't focus much on the healthcare spend. At least didn't speak much about it. But on the last,
remember, she had a 90-minute constraint. She overshot by 60 seconds.
You could have just said we are allocating 6,000 crores, but I suppose the constraint was larger than that. But I think, just on your last comment, Mr. Mehta, it is interesting that for the first time they recognize trust-based governance.
Yes.
If you read the fine print, you will know
Yes.
it's actually punishment for self-declaration rather than encouraging self-declaration, because there is up to 50% incremental taxes to be paid when you file an updated return. But I'm actually very glad to see the concept of trust-based governance finding some formal mention in the current year's union budget. But that said, Mr. Garg, I'm sure you have a few reactions to this discussion that Mr. Mehta led to.
I think I'm conscious of the time constraint, but this is an extremely important subject. In my assessment, the quality of life for India can improve at 3 levels. We as individuals have to do a lot of things. We as families, communities have to do a lot. And we as the government, as a nation have to do. Everything perhaps cannot be solved at the individual level. All three have to do. I'll just give you an example. I live in Delhi, which had seen the worst of the AQI for the last couple of months. Now, how do I contribute or how do I improve my or my family's quality of life in this situation? So believe me, we had to invest a lot in air purifiers, dehumidifiers, to make our microclimate improve, right? But I can't improve the climate out on the street. That's a much bigger question. And incidentally, the government as a social construct is meant for taking care of the common goods and services. That's why the citizens pay taxes on that. That is what the government should be spending its resources more on, improving the common climate, common pollution, rivers, our streams, and those kind of things. Unfortunately, the way we have evolved as a government, we spend more money on private goods. We spend Air India, it's being cited as an excellent example of the privatization. It is.
But in the meantime, Mr. Desai, any reactions to this?
Well, I think quality of life in India is a big issue, but I just want to add another dimension. I think what we can do when we are talking about budget and the collective resources that the government has and the power it has, I think 2 or 3 sectors which need a lot of attention in terms of execution and not mere allocation of financial resources. One, health. We have shown as a nation, ably led by the leadership, that we can do a lot in terms of community health, including collective vaccination in such a short time. Very commendable, but our health infrastructure on the learning backing of this learning can really take off to a good level. That's one. What is far more wanting is our primary education system, which I think is less than satisfactory, to say the least. And their government's resources can only make it different, given the size of our populace and given the area of the geography that we have. And the third is, I think, the judiciary, which is where I think a lot of resources are going. But if one were to look at the judiciary at the local and the state level, I'm not saying high courts and Supreme Courts, which are possibly better than some of the best in the world, but I think the rest of the judiciary needs a lot of reforms and redoing. So quality of environment on those 3 soft side is something that we should not lose sight of. That's my thinking.
So today there are lots of technical issues, it looks.
Time for the 5G auction to be fast-tracked, I suppose.
So
Mr. Garg, you were saying something on the quality of life.
Yes, so I moved that the government is the principal agency to do a sort of investment on improving the quality of life. And that requires the government expenditures to be reoriented towards common goods and services and taking away from the private goods. So I was just giving you an example. The Air India, which has been a successful privatization after a long time, has led to government bearing 90,000 crore of cost in the form of debt taken over, and it had to write 50,000 crores of equity. So this has come after such a big cost, and annual sort of accommodations given were still different. So same thing is going to happen on the BSNLs of the world, and so we have to have a basic reconstruct. Incidentally, Mehtaji, I argue about this in my book quite a lot, that how we need to do a fundamental restructuring of the government expenditures. So I think we should have some audience questions.
Yeah, but before that, Mr. Garg, I just want to, I just see Nikhil's back.
Okay.
I want to quickly bring him in on this aspect as well. Nikhil, sorry, we are running a little short on time, but any quick reaction of life in India, and the good part is at least the wealth tax has not come in this year for us. Any quick reactions on this?
Yeah, see, we speak a lot about taxation on the budget day, but the main problem that we all realize and don't really talk about is only 1% of our country pays tax in any reasonable form. That 1% which pays income tax, are they the only wealthy people in the country? Probably not, right? Like there are a lot more people who should be paying tax and not paying tax. We have figured with experience that taxing income alone leaves plenty of loopholes for people to evade and not pay the tax they're actually liable for. If you were to look at America, for example, there were many experiments of different tax rates. They tax people at 50%, at 40%, at 30%. They realized, I think Nixon did this, and John F. Kennedy did this as well. They realized when they took taxation down to 20%, more people actually came out and paid tax because the incentive to evade became lesser, and the next net tax collection actually went up. I feel personally, taxing people on things like wealth every year is not conducive to the overall problem that we have. But things like inheritance tax, which is paid once, at the end of their life, things like property tax, right? Like a lot of the tax evaded money in our country finds its way into property. If you take America, for example, again, you go to Connecticut, you pay as much as 2% of the property's value as property tax. We don't even pay 1/100th of that in India. So things like property tax, things like inheritance tax will go a long way in widening the tax bucket and getting a lot more people than that 1% which is paying tax today to pay tax. And I think that is the only solution. I could go into details and say, why is a farmer, for example, who's earning more than 10 crore rupees a year not paying tax? And, take examples of companies like Monsanto, which are, not paying 200 crores in tax a year because they're using this waiver and stuff like that. But it becomes more of a political problem. But I think the key here is to widen the tax base and make more than 1% of the country pay tax. Only then does the government really have the gunpowder to do more effective things which will solve a lot more problems, be it in terms of infra, be it in terms of bringing down the wealth disparity and all of that.
Sure. No, very, very useful perspective, Nikhil. On this note, let me just check if we have any questions from our, from our attendees. Some questions on digital assets. We have digital assets is something that we've spoken of. I think one question for Mr. Garg particularly is if there is any views on increasing demand generation. I think the government has been quite focused on side issues. And do you have any views on demand generation here, Mr. Garg?
So basically, the demand is generated by the consumption demand and the investment demand is generated by essentially three phenomena. You improve incomes, or you improve credit, or you improve the transfers from government to poor. These are the three ways in which both the demands are improved. Let's take one by one. So in case of income, the economy takes care. So if the economic growth takes place, if there is more employment, then you get that income. So the government has not really addressed much on this issue, except promoting investment. There, the employment effect comes with a lot of lag. And the kind of investment in railway construction or the highways, today having become quite mechanized, and the employment effect is much less. The best impact is when the government transfers the money to the poor, or those who are indigent, who just can't work. So there the proposal seems to be that there is not much change in the employment strategy. The government has continued with that PF contribution scheme, that Atmanirbhar Rojgar Yojana as it is. Narega has been continued with lower allocation, but that can be understood. That maybe as it goes, if there is a demand for the next year, it can be improved. The food income transfer is the major one which happens these days. That seems in for reduction, because the food subsidy allocations for the next year have been so on the sort of demand generation on the consumption side. I see the budget as the consumption neutral, in the sense, no more new measures, no more additional measures to be there. The investment we have discussed, Mr. Mehta is much better person to do. On the credit side, I actually have a lot of apprehensions about the kind of intervention we do in the form of this emergency credit guarantee scheme. This, to my mind, is creating credit which is compromised quite a lot. The government has also in its budget now started making provisions for the losses which might come in. So for next year, 15,000 crore of losses on this account. Anyway, this has become governmentalization of the credit. I'm really worried about that aspect. But let me leave it at this stage.
Sure. Thank you for that, Mr. Garg. I know we've overshot our time by a little bit, but I just want to sort of bring it to this panel, 30 seconds each. Any concluding remarks? Mr. Mehta, we'll go with you first on this.
Thank you. So I think the budget is providing the continuity of this government. It is providing the right direction. There are obviously some challenges, there's no question about it, which need to be addressed. Balancing the entire income and expenditure and making sure that there will be some exigencies, that we are ready to be able to address those and find the right resources. I think that's really where the government needs to think through this. And I would say that execution really from here on, and looking at some of the stuff that was irrational stuff that has creeped in over the years, it may not happen, the course correction may not happen overnight, but I would say that removing the cobwebs is so important, and cleaning up from the past. That will only allow a seamless growth from here. Otherwise, we will be always getting entangled with something relating to the past.
Sure. Thank you. Nikhil, any 30 seconds concluding remark?
Yeah, I mean, of all the things we spoke about, I think widening the tax base in India is probably the one important metric that I'd like to focus on. I think if they can take that 1% up to even as much as 3%, it would be a significantly rationalized tax structure that more people will be happy paying. And, you know, tax evasion is kind of looked down upon or frowned upon in India, but people who are doing the right thing and paying tax and, you know, are doing everything the right way, they're not rewarded in any way. I feel like that should be incentivized. Like somebody in India should take pride of the fact that he's paying X amount in tax. And maybe some incentives to that end will really encourage people to come out and, do the right thing, for more people to do it.
Sure. Thanks, Niti. Mr. Garg, concluding remarks.
Thank you. I think three quick things if we focus on. Number one, stay engaged on the policy reforms. Not much has been said in this budget. The privatization and that kind of policy reforms is very much essential. So stay course on that. Second, the reorientation of expenditures from the spending on the private goods and to the public goods is very essential. That's what must be continued on. And finally, I think the government must deal with the big problem which we are seeing of burgeoning debt. I think that is going to be a major problem for times to come. We should not accumulate, so government should find ways. So I think these are the three advices, if I may offer, for the government to go forward.
Sure. Thank you, Mr. Garg. Mr. Desai, concluding remarks on the subject.
So 3 or 4 things. I think disinvestment, privatization, divestment, by whatever name one calls, there's a huge asset base that the government has, both on the listed side and otherwise. It should very aggressively and in a planned manner get out, which will help address other issues which others have raised. I'm not going into that. Second, provide some fiscal incentives to MSMEs in terms of accelerated depreciation linked to additional jobs created, investments made in working capital, etc., rather than just throw this guarantee lines at them. Third, give rationalized tax, almost tax breaks to the lower end of the pyramid. Those who earn up to 6-7 lakh rupees a year and are honest tax citizens, give them reprieve. And fourth and most important, take some policy steps to really strengthen the bond market in the country, when government itself is the biggest elephant in the room called the bond market. Thank you.
Thank you, Mr. Desai. And on that note, we'll also conclude the session. Thank you, gentlemen, for your time and all your all your efforts in this direction. We are very, very thankful for all of you having spent time and given us such valuable inputs. Thank you to all our attendees who've taken time off on a morning to listen to us. We hope you enjoyed the session. If there are any questions that you have further, either on the proposals of the finance bill or on any of the discussions we've had here, please do direct them to us, and appropriately we shall also reply to each of you. Thank you all for your participation. Thanks a lot.